Good evening and welcome into another edition of our 640 special here on the WFMJ Facebook page. Tonight's topic is taxes. And joining me now is Nicole Duhart of Jackson Hewitt Tax Services. If you're getting ready to file your taxes, you may have some questions, and we've got the expert here to help you out. So if you have a question, please put it in the comment section there here on the Facebook page. Nicole, thank you so much for joining me. I appreciate it. Let's start with what is new for this year. This is 2021, but we're filing for the 2020 tax year. Give us an idea of what people are going to be looking at.
Absolutely. This year, there are quite a few changes because of the pandemic. We have the recovery rebate credit where people are capturing their stimulus payment that they did not receive throughout the 2020 year. And some people received it in 2021, but you have the opportunity to reclaim that credit if you did not receive the first or second in 2020. It also applies to people who had children in 2020 as well. They have the opportunity to receive those credits for newborn babies in 2020. Another new thing that people are encountering are individuals who had to take out of their 401k due to a hardship because of the pandemic. A lot of people don't realize that you can spread that liability over 3 years, or if you had taxes taken out of it, you can also reclaim it this current year in 2020 as well on your tax return. So those are the two biggest things that we're seeing, as well as unemployment. A lot of people seem to be caught off guard that they should have had taxes withheld. Others that have had it withheld, it may not be keeping up with your current tax bracket. The max unemployment will take out is 10%, and many individuals are above a 10% tax bracket. So those are the three largest items that we're seeing in our offices that we're having to help tax filers navigate through what's best for them for the 2020 tax filing.
And I'm glad you brought up unemployment benefits. I had that as one of my questions. What do people do? You mentioned they may not have known they were supposed to pay taxes on those.
Exactly. We are just really having to explain to them that it is taxable income, whether they received it on the federal side because of the pandemic, the extra $600 a week some individuals qualified for, and then even the income that was received during traditional unemployment. It's all taxable. We help explain to them how much of their refund or maybe their liability in some cases is because of the unemployment. And it's really nothing that can be done at this time. Those that are still on unemployment, we do help them navigate on the website where to go to start taking taxes out of it. However, you have to include it on your 2020 tax filing.
That's a great point. There are many people still claiming unemployment benefits now, so let's start working towards next tax year, and either getting those taxes withheld or start setting money aside for that. Is the pandemic likely to delay our refunds if we are receiving a refund?
Absolutely not. The IRS opened February 12th. As we know, it was President's Day that Monday, and we have already started seeing state and federal refunds being dispersed already for individuals that were early filers. Some of the things that may delay returns, like I spoke of, individuals who claim that recovery rebate credit, those returns will be pulled out, and the IRS is going to verify, in fact, that they have been shorted stimulus refunds, so that possibly could delay returns. And just like years past, we still have the PATH Act. We have individuals who claim the earned income tax credit, they always will look at those, or they randomly pull those individuals just for routine audits.
Got it. We have a question from Facebook, Nicole. Someone wants to know, at what age or how long can you claim a child on your taxes? At what age do they have to go off?
If they're in school, 19 to 24. So you can claim your children up to 24 if they remain in school. So that's a question that we get often.
I bet. From individuals. I bet, because that really can make a big difference in your taxes, can't it?
Absolutely. That, and when they go off to school, they feel independent, falsely so sometimes, or they talk to their friends, and just because they're out of the home in the traditional sense, a lot of parents lose credits because they think the children should be claiming themselves because they may have work study or a side job. However, when they're still in school from the age of 19 to 24, they still can be claimed on the parent's tax return. And then if you want, you can allow your children, your college students, to file their own. They just need to be cautious and make sure that they indicate on the tax return that they can be claimed as a dependent themselves, which will allow them to become responsible filers, allow them to file, and they'll be able to receive the majority of the withholdings on the federal side that they had taken out throughout the year as well.
All right, that's a great point. When you pay taxes, Nicole, you have standard deductions and you have itemized deductions. Can you take us through the pros and cons of each and who should do what?
I would say since the standard deduction has been doubled almost in the past couple of tax seasons, the majority of filers are now falling into the standard deduction. But that's one of the things that we do at Jackson Hewitt is we go through both scenarios. So we encourage all of our clients to bring in their itemizations. We go through it with them, we total them up, and we determine which one is best for them. And if it's the standard deduction, we go with that. If it's itemizing, then we actually itemize everything for them, and we just do whatever's in the best interest of each individual client. There's really no standard answer. Everybody's situation is different. It's pretty hard to reset itemization now just because it is so high. However, there are still some people that they benefit from itemizing still.
There was a follow-up to the kids' question here on Facebook, Nicole. Can you still claim them if they're not in school?
You can. It's not earned income tax credit. There's a dependent credit for $500 that they can receive. And you have to be cautious because if they make over $4,300, they are required to file their own tax return. So if they're not in school and they are making a nice income, I would suggest bring them into the office with their tax documents. Here at Jackson Hewitt, we do not charge them for anything to look it over, and we will do what's best for mom and dad as well as the dependent, the new filer.
So if they're making more than $4,300, they need to file themselves?
Yes, they do.
Okay. All right, great. What's the difference between tax deductions and tax credits?
That's a popular question and one that gets kind of confusing. Deductions is, I hate to say it, is what it sounds like. Those are things that can reduce taxable income. As tax professionals, we say it's a non-refundable credit. It reduces your taxable income. A credit can be on the refundable side, which goes right to your bottom line or into your pocket, or the non-refundable side, which also reduces taxable income.
There are apps that can do this for you. You can obviously go to professionals. Some people even do it themselves. What's your advice for people who are trying to figure out the lay of the land here in terms of filing for taxes?
Absolutely. Of course, I always encourage everybody to seek a professional, even if it's just for some guidance, just because there are literally millions of dollars of credits that are left behind because if you don't answer that app correctly or online software correctly, it will not pull in deductions. A tax professional knows what they're looking for. They know what credits that they should be seeing in the finalized 1040, and we will make sure we capture the most money that you're entitled to as a filer. I also caution people when it comes to online software or apps, make sure it's verified, make sure it's legitimate. In this day and age, identity theft is really, really huge. It's very hard to get out of. It's definitely not something that we like seeing when people come back the following year that we're trying to help them navigate through identity theft and having to file paper returns for the next 4 or 5 years as a result of using online software. As well, we have clients who have let someone else do it themselves. They never received their money. They don't have paperwork to show what was filed. And it just becomes a really big hassle. So if you're going to do it online software or an app, I suggest they do it themselves versus letting someone else do it. So at least you have control over your personal information. But this year with so many different credits, we have a look back as well that can be done. All software does not do that properly. That's as a result of the PATH Act, to where we can look back to the 2019 tax return and determine which credits are in your best interest. So for 2020 tax filing season, I definitely suggest most people should go into a tax office.
That's a great point because there's stuff that you guys know about that can maybe get them some more money that these apps and the computer software just doesn't.
Exactly.
We've reported on how stimulus checks are not taxable, but we had a question on Facebook. She's a stay-at-home mom. She does not file her taxes, but she received a stimulus check. Is there anything that she needs to do there?
She does not. That is federal dollars. She put it away, invest it, or save it, or whatever she needs it for to meet her needs. But you do not have to file. If your only income is a stimulus check or something that's non-taxable, she's eligible for retirement or Social Security or SSDI. She does not need to come into the office and report that. Only individuals who fall in that same category that did not receive it, we can assist them in filing a recovery rebate credit so that way they can receive their stimulus checks they're entitled to.
Let's say someone is really lucky, Nicole, and here in Ohio they hit the lottery. At what point do they need to start filing taxes if they win the lottery?
When they win the lottery. Usually, especially if you are lucky and you're here in our hometown casino, they do a really good job here at our local Toledo casino, and they will issue them a form or a printout right away. I just always encourage all of our clients to have taxes taken out of it. Many individuals do not; they just enjoy the winnings, and then they feel the aftermath when they go to file. But as soon as you have some winnings, whether you usually file your own, again, I suggest you come into a tax professional's office, because even if you're on Social Security or if you're on retirement and you traditionally don't file, that additional winning, depending on how large it is, can make some of your Social Security taxable. So it's one of those things. If you have something new or change in your life, I suggest you sit down with the tax professionals just to make sure you're doing things properly.
Remember the big surge in GameStop stock, and people
Yes.
purchased, and they may have capital gains there. What advice do you have for those folks that maybe got an influx of money there in that situation?
The exact same thing. We have clients who they do their own day trading. They use Robinhood. Some people use brokers. You should have a brokerage statement. All of those apps and online trading systems will generate a 1099-B for brokerage statements. When you receive that, they're letting you know that you have income that is taxable that you need to report as a gain.
Are
Or
there
it actually may be, unfortunately, if you have a loss, it could be in your favor as well. So either way, you need to bring that in with your traditional tax return information, and we will take a look at it and see how we need to handle it for you.
You mentioned a loss. Can you claim a loss and that can help you?
You can. I mean, you don't see it right away or dollar for dollar like most people think so. However, it does show, it's like a net income to where, based on what you put in, the market value and what the loss is, it does show, or you will receive a credit for that.
Are church donations eligible this year to be tax deductible?
Absolutely. One of the things, as a result of the PATH Act, that has been afforded to everyone this year, $300 can be written off, up to $300, even for those who don't itemize. Prior to the pandemic, only individuals who itemize were able to capture some sort of tax benefit for church or charitable donations. But this year, up to $300 can go to every individual filer, whether you itemize or not.
That's certainly something to take advantage of there. Any other situations that get brought up into your office where people maybe didn't realize that they had to pay taxes on that maybe you can help share with folks right now?
The biggest thing is unemployment, and then the second is the category of people who had to go back to work because of, or those individuals who picked up a side gig during the COVID because they were laid off work. They were waiting for unemployment to kick in, so they picked up, let's just say, a transportation side gig, or they were doing personal shopping. Those individuals get issued a 1099 as if they are self-employed, even though they're subcontractors, and they don't have any taxes taken out. A lot of individuals are surprised that the money was as good as it was. However, now is the time when they file to where you have to pay those taxes back. So they will have a self-employment tax on that. So that has been a shock to quite a few individuals in our offices.
Last year, I believe they delayed the time frame in terms of when you needed to submit your taxes. This year, it's the normal April 15th, correct?
Yes, it is. So far, they're still on track with April 15th. And from what we're understanding, they are trying to stick to that without fail or extension. So unless you file a traditional extension by April 15th, they are due then. If you do file an extension, you have the additional 90 days to October 15th.
And if you unfortunately have to owe the IRS this year, and this is your first time having to owe, there are options. You don't have to pay it all right at once, right?
Absolutely. The biggest thing that most people feel when they owe the first time is that they have to pay it right away at the desk. And what we do is let them know you do not. The biggest thing is to file on time. Do not put it off. Do not wait till next year, because on April 16th, you incur a $500 late filing fee that's going to be tacked onto your liability, as well as penalties and interest. All of those are avoidable. File on time, contact the IRS, let them know that you are aware that you have a debt, and set up a payment plan. The IRS actually is more than happy to work with individuals when you have a debt. Make sure you let them know what's realistic for you that you can pay, so that way you can stick to the actual payment plan, so that way you stay in good standing.
All right, Nicole, I think that's going to just about wrap it up. Any last words of advice you have for people here who are still thinking about getting their taxes in?
I would encourage everybody to come in as quick as possible. The biggest thing is to file early, so that way if you're missing documents, you have time to come back into the office and get it completed so you can file on time. And that way you're also not putting a strain on the IRS, and that way we also can get you in. I also encourage everybody to come to a local Jackson Hewitt tax service to see myself or one of our professionals.
Where are you guys located?
We're all throughout Toledo, Oregon, and Perrysburg. We have 10 storefronts everybody's welcome to come into on each side of town. So you could give us a call at 1-800-234-1040 or 419-269-1040. We would love to hear from you. We will direct you to the location closest and most convenient to you. And we are requiring, just because of safety issues, we are making sure everybody stays safe, so we are scheduling appointments only.
All right, excellent. Nicole Duhart from Jackson Hewitt Tax Services, thank you so much for your expertise and knowledge. We really appreciate it tonight.
Thank you so much for having me.
All right, we hope that that has answered some of your tax questions. Again, you can always review this video if maybe you didn't get a chance to watch it all or you want to go back and hear some more from Nicole. That's going to do it for us right here. We'll see you tonight on 21 News at 11.